Logging in. But hey, guys, welcome to Coffee at the Close. I'm here with a few of our veterans as well as some of our newer members coming into a lot of names that I don't know, which makes me excited. Just because Osmium, Jack and I were talking about how hard this sector can be, and I wish I'd had, a group or community. And I sound like a broken labor record, but just how difficult it can be to go on your own as an outsider. Not only as an outsider, we were talking about the companies, how difficult it can be for them with the varying guidance from the regulatory authorities. Jack, who you see here with me, you might remember his name in chat, which is Osmium Research. He has a few decades of dealing with the FDA, a not very pretty estimation opinion of them, right?
Well, there's some good people there, but overall, boy, it's a tough experience. It's just very inefficient.
I like that you guys, the longer term members, might remember Transmedics TMDX, which was a big winner for us. I was late to it. I think Jack was actually, as Osmium, one of the first ones to bring it to our attention in chat in the teens. And we were talking more recently about Profound Bio, PROF, a prostate medical device player. Uh, I was stalking it at 550. It's in Playbook, where I publish the ideas that I might move money into. And so far, it's run without me. Jack was just saying before we started that it's not the same as Transmedics, right? That you view it differently.
It's very different in the sense that I evaluated both those technologies and I felt very strongly about transmedics. It just made a lot of sense to me, having done devices. And also so did Profound. I saw Profound, and I can only look at it from a technologist perspective. And there was just no possible way that any other technology could be as safe as Profound because the transducer is immediately next to the tissue that it's heating, and there's real-time feedback in the consequence of putting energy on the tissue. There's just no, you can't do better than that. And but that's not enough. That technological evaluation is only a starting point. And it's much more complicated as we've learned, as I've learned over the last 3 or 4 years.
I remember we were talking. One thing I love about chat is we have different viewpoints, and this is an Osmium a Jack quote that the more viewpoints we have, the better we can arrive at a profitable, at a wise trade decision. And so, Jack looks at it more from the technological side. I look at it more from the analytical side, maybe the business side. And one thing I noticed in the recent presentations for Profound is that they switched from just talking about the technology to pathway toward revenue growth, actual revenue projections. But at the same time, I am concerned that they did make it pretty clear they're going to dilute sometime soon. So I would look for a dilutive offering. We normally don't start coffee in the close with a specific stock, but I was just taking advantage of the fact that Jack, thankful you're here. You can see, let's see, for Alpha and a few of you guys who are just joining now, Jack is Osmium. It's his first time joining the call. Osmium, um, Alpha, Eisenberg. I can't see who else we have there. I see we have Wasim, Mahmoud. I'm assuming is new, um, correct, and a few others. Um, as usual with the coffee at the close calls, I have just a few topics to discuss, and the rest is open ground. Anybody who wants to discuss their favorite ideas on radar, any technologies, anything sector wise. We've had quite a few buyouts lately. We've had bidding wars. You can tell the tone is palpable in biotech as far as the euphoria, the optimism. And so I think it's very important. The first question of mine, which is if your portfolio is at highs, mine is about 5% below all-time highs. How are you managing risk and avoiding getting swept up in the euphoria? My problem in the past, and I'm glad I haven't erased any of those tweets or posts on X, as you can see in 2020 and 2021, where I was cheerleading a number of companies, Affimed or whatever it was, that's either delisted or, and I like looking at those tweets. I didn't have my position sizing rules back then, so now, as you guys know, if it's a commercial sized company, the maximum I'm allowed to invest is 10% of the portfolio. If it's clinical, it's 5%. Back then, I did not have those kind of rules, or maybe what I shared is a reasonable in chat, but in my own on my personal portfolio, I'd go further into it or whatever. And so this time around, I want to keep making money. The goal is to be boringly profitable, but I don't want to give gains back to the market. My previous MOA was always have a hot streak, and then after the hot streak is when you give it back to the market. So one of the biggest things for this call is reminding people, maybe with things at highs, asking each person, what are you doing to manage risk? What are you doing to, it doesn't mean you're taking your money out of the market, out of biotech, but how are you prioritizing risk management? And that question is open game for anybody.
Um, I'll start. I'm doing two things. One, I have a number of options, call options on stocks, and today I lightened up significantly on several of them. Actually, took some losses on a couple of the nearer term options. But I think more helpful for the rest of the audience here is taking a look at the charts. And typically, when I'm talking about a particular stock, I often try to include a snapshot of the particular chart. And if both the volume as well as the stock price is going down and not at least flat or going up, that to me, and especially in a down market cycle, is a really big red flag. And so I'll be a lot more judicious in terms of selling things that are not going that way. I'll miss a few of the tops by doing that, but that's my number one objective going forward here.
I like it. It means you're catching the meat of the move and you're not worrying if you catch the exact bottom or the exact top.
Absolutely. Yep.
And that's what Jack and I were talking about, even with Profound or some of these others. Sometimes I try to get too cute with my entry points. I want it to be exactly at the low. And that means you're missing out on some quality names that run without you.
Yep.
Um, Another thing that goes along with that is these sell the news reactions we've been seeing lately, where in my case, you guys know I don't like to roll the dice. I want as many factors in my favor as possible, not having a background in the sector per se. Been involved in biotech, 17 years now, but I mean, as far as the actual degree and so forth, I like to be aware of what I don't know. And so with these companies, I like to wait until after they've reported the results, after the conference call, and then I take action. So that's one thing I've been doing in chat. Osmium, Jack saw it the other day with Profound, where I posted my conference call notes right after the call. Before that, I did that with Syndax, SNDX, with Nuvation, NUVB, with Harrow, HROW. And a lot of these cases, what we saw was the stock would sell off. Nuvation was a good example. Nuvation was down 15% after the quarterly report came out. And the market did not like that safusidenib is not doing a head-to-head study against vorasidenib. That was FDA guidance. But there were other parts of the call that were resoundingly positive with the Ibtrozi launch metrics. Looks like it's picking up. And so after I posted the notes, people in chat in our real-time trades channel were able to take advantage of that and buy it after the news, buy it after they've read the conference call nuggets and can make an informed opinion. And we did the same thing with Syndax after a Q3 report. It fell to 13. And I posted the call notes, and those who wish, quite a few people bought it in the 13, 14 range. Now it's back up to 17. We saw that with Harrow selling off HROW because there was a slight revenue lowering of the full year revenue. And that was in the big scheme of things, small potatoes, because Vevia, their eye drug, is ramping up really nicely with investments in supply chain to make sure they can meet demand next year. And so each time it's not that, you just see a stock go red and you say, oh, I'm going to jump in the gap, because you never know. It could be down 10% and then it goes down 30%. But you wait, you verify, you read the notes, you listen to the call, and then you make a decision. Stephen, I see you finally you joined too. Welcome.
Thank you. Mm.
Um, Anybody else as far as risk management, what you're doing at highs to stay grounded, Wasim?
Yeah, sure. I'll go next because this is the where I struggle the most. Well, they say that the youngest people should risk more. I don't agree with that. Really bad experiences. So what I'm trying to do now is instead of like being more like selling, um, um, I'm trying to stay on the commercial stocks, try to find good date to sell covered calls. Um, that way, if it drops because of any other reason, I still make some premium and hedge a little bit. I know that's not enough, but I don't want to miss out on the upside, especially on the big names and the good names. Example is Madrigal. I sold at 320 something. It's currently at more than $500 a share, and I thought it was overvalued at the time. Um, Same thing with Insmed. I think that those are great companies. Probably continue to go up in price as they're finding new indications for their drug, and just the sales are impressive. Nobody predicted this to happen, right? So mostly that, and also if there is any rumor, I try to sell the rumor. If it pops 40, 50%, especially in this market where
Mhm.
just a rumor would move the price up a lot. So
Especially right now.
yeah. So I'll try to sell the rumor instead of trying to find out if it's true and maybe catch a 10 or 20% more. Um, and just a note on this, Hidara Therapeutics, I think was acquired by Merck, and it was acquired at 220. I think the price was.
Hmm.
Someone was mentioning that they IPO'd in 2015 at $320 a share pre-split. So those who bought at IPO still never made money.
Well, that was a
So
big
yeah,
one for Hubi Caritas in chat. He bought that one and shared his thesis at the end of September. And then Mike from NZ, he also owns that one at $1. So it was something like $17 pre-split. So
Mm.
pretty nutty. You were saying, sorry, I cut you off.
yeah. So yeah, all I'm doing with risk management now is trying to sell covered calls on the good names and limiting myself on the clinical stocks, which is what you started doing way
Mhm.
before because of the uncertainty of how the FDA was going to do things. And clearly, they did things in a way that most people didn't expect, with Cure affecting other stocks like Biohaven.
Mhm.
So yeah, I took a hit on Biohaven as well. So,
No,
but yeah,
yeah.
we learn and survive to fight another day, right?
Yeah, live and learn. Biohaven, I could have easily gotten caught into. I just got lucky that I sold it the week prior to that decision for similar reason. Just moving a lot of our trade rationales in the portfolio are, we say, the portfolio cage match, where you have the stock you own and you compare it to a stock on radar. And sometimes it's one that offers higher upside potential, or in many cases lately, the trade is because, let's say they have the same high upside, maybe they both have 100% upside potential, but one is a lot less riskier. So one of those stocks is heads win big, tails lose big. In another, like Syndax or something, is heads win big, tails, the loss is hopefully limited. Speaking of Syndax, a friend of mine who he told me the last time we had a stock in common as one of our top holdings was Orchard ORTX, which was bought out for a pretty 100% plus premium. And now he's buying Syndax here at 16. And what I admired about that is I bought Syndax at 9, but a skill I have not mastered. I wish Hurtado, Jose, he couldn't make it this time,
No, I
but
was.
oh, there you are.
Yeah, he's right here.
Welcome, buddy.
I was.
Glad,
Welcome.
I had a
glad.
problem with my new laptop. I wasn't able to see myself, and just I just logged in via my phone. But yeah,
Hey,
that's why.
we're glad you can make it. I was just saying that one thing Jose does that psychologically I haven't been able to do. He did it with RNA and some of his other names bought out this year. Not that he was planning on a buyout, obviously, but he buys them on the way up as the valuation continues rising because they remain. You can explain it better than me, Jose, but
Yeah.
that's hard for
Oh,
me to do.
so actually, it's a good example, right? I tend to buy early, right? Especially when I look into the story and I see a potential. And based on that, as I'd like to first to get a stake on it, right? So
Mhm.
the initial price could be up or down, could be going up, etc. But I prefer to go into a stake. RNA was one of those in which after the partnership with Bristol Myers a couple of years ago, the stock was at 9 and 916, I remember. And that's where I started buying and went all the way from there. I started buying at multiple price points. But to me, and as I mentioned this earlier, more than price, as I was getting more familiar with the story, started getting into valuation, right? And especially when you get to know the programs, the potential in that case for either being first in class or best in class, plus the money, etc. You start getting some projections and what if scenarios, etc. Then you end up being into some sort of like scary numbers in my case with regards to valuation. And then compared to analysts, who I wasn't that far with the upper range, therefore I like felt comfortable, keep adding to it. And as the company delivered, I felt comfortable staying in it.
Mhm.
So M&A was one of the possibilities that I had in my business case. So when the rumors came, I think via the Financial Times, I stayed.
Which stock are we talking about?
Ability, still
Okay,
RNA. So
RNA.
basically,
Okay.
my risk management is constant. So basically, it's constantly challenging the business case or the company's how can I say this, pipeline and execution.
Mhm.
Is it meeting or not what they are supposed to be doing? And leadership is also super important to me. So even things like Biohaven, right? I'm still staying there because I still believe that leadership can deliver later.
Mhm. Oh, okay, gotcha. Yeah, I saw that you were adding to Biohaven. Um, I was going to say I'm trying to remember with these you were adding to. Something came to mind. My train of thought completely wrecked. Sorry. Let's say we were saying you were adding on the way up. Oh yeah, I remember
One
there was a
example
quote.
is Apogee.
Okay, sure.
That's a perfect example because I'm adding on the way up. And if they deliver on best in class, which is my hypothesis with regards to atopic dermatitis, valuation here is nowhere where it should be. Therefore, I'm comfortable where things are headed, right? So that's one example in which I'm adding up. At some point, I'm going to stop, but for now, valuation is still constructive for me.
What the huge contrast for me is when I started investing in biotech in 2008, I would always look at what I could make, but I would never think about how much I could lose. And I remember I posted something on X recently that said, if you're only thinking about how much you can make, but you're not thinking about how much you could lose, you're already losing. And somebody responded, that cut really deep, but it's so true. And there was a post from Jose when we've all experienced this, where if I have a win streak or somebody else in chat has a win streak or somebody on X, an Adam May, a CD or whoever has a win streak, everybody kind of puts them up on a pedestal. And not a bad thing because they deserved it. They did amazing. Jose did amazing. But the problem is they think the person cannot fail. They follow all of your picks. And one thing that I liked is that some people use that spotlight to hype some more stocks or whatever. And Jose, his first post after that was all about risk management and the fact that this buyout and RNA was a bonus, but it wasn't like he was going for it. He was always at all times thinking first about how much could he lose in that position and would he be okay with it? Does that sound about right?
Yeah, actually, I'm glad you're mentioning this. And I was telling a friend of mine earlier today, one of my worst moments over the years was right after like a big win. And then ego comes in. Oh my God, I'm the best in the world. Therefore, I'm going to go all the way. The very next one is a horrible thing. And I learned the hard way not to do that. So even with my wife, we were certainly super happy, right? Because RNA was a game changer for me. It was by far my best investment. But again, it's like started saying, okay, no, I need to stay super level headed because I know that I can do the really opposite side and in minutes or in a day or two, just losing what I made. So yeah, I learned the hard way.
We definitely agree with you there. I remember anytime we feel like a genius is when we should at least maybe even sell a quarter of a position or whatever, but just get some cash out
Yeah.
of it so that we feel. Uh, I'm glad that your wife is supportive there and also helps you with stay grounded, I
Yeah.
imagine, right?
She's a very good risk manager. How
So
about that? Yes.
I've told this funny story before, but back when I was an English teacher in Peru, so imagine, back then when I first started making $600 a month or whatever it is, and I'd already committed career suicide, quitted a finance job in the States, and my wife at the time, I bought a stock Celdex that was at $5 a share, and me being an idiot, it went down to two, and I went all in, and then from two it went up to 38. And so I'm this guy who has, who's seen a quantity of money in my investing account that's multiples beyond I would ever have thought possible. And I'm thinking I'm a genius. And Celdex was in phase two. They had a glioblastoma drug, which is a graveyard indication for drug development. And the drug in phase two had some of the patients living multiple years longer than they were projected to. And one of my weaknesses as an investor is I get caught up in case stories, case studies of how well the patients are doing. And then I lose the focus from an investing standpoint. And so my plan was I was just going to keep holding it for the big phase three win, then watch it get marketed, get bought out, and make, millions and millions of dollars. And at the time, my brother was like, if you feel like a genius, it's time for you to sell. My ex-wife at the time didn't have any wife at the time didn't have any investing experience, but she was also telling me week after week, you really should sell this. It fell to like $25 and I sold the rest of it. And that's how I, bought the apartment in Peru, started a business, etc. But what was funny is I sold it just to have some peace at home. And then I want to say, and I want to say a few months later is when they reported that the phase three trial flunked and it went from 25 to under $1 in a day. And so that for me that and there's a few other experiences similar that just crystallized it for me. Anytime that I start feeling like I'm the man, like Jose was saying, is when we got to take a step back and be like, this is when I'm in the most trouble. And so that's why I
Yes.
started this call with today with all of us or many of us with your accounts at highs, uh, many of us doing better than we ever expected at this point. How are we managing risk? What are we doing to make sure we stay grounded? What are we doing to make sure we don't lose our heads and lose our portfolios?
Very cool. My wife asked me to sell as soon as I'm up 10%. So now great.
So basically, she's your covered call, or
Exactly. I should call
I,
her
you
covered
know,
call.
this is Arnold. I just want to echo Jose's. How are you?
Hey,
Yeah, hi, Jose. Yeah, the management teams are extremely important. So when you look at the company, if you have a solid management team with a good pedigree, you know, this is a company you want to go with, and the minute you see otherwise, you should trim your position or sell. Um, Having followed a lot of hedge funds in my career, because in my prior, um, you know, career, I was fund of fund manager. So one of the sayings that one of the hedge fund managers said, "Smart people don't get stupid overnight." So you really have to go with smart people. And given the binary nature of biotech, it is really important not to over leverage and just keep your, you know, I don't know, 5% position of your portfolio. unless you have high conviction, then I don't like to use any of the derivative instruments in my, I don't want to pay for hedging. Um, and you have to, also, there is very difficult to hide nowadays anything, everything is available. The information that you could look at 13Fs or Form 4, who is selling, who is buying. This is a great indicator as well. So, this is my 5 cents.
No, we appreciate you chiming in, Arnold.
I
Um,
can. Hey,
Go ahead,
Jonathan, if you want, I can share.
please.
Let me see if I can figure out how to start the video.
Oh, there
Hey,
you are,
everyone.
Mike.
Hey,
Mike from NZ, guys.
Hey, everyone. Um,
Go for it.
I use the system I use. So I have 4 tiers of stocks. Jonathan, I think you know this, but basically, so I have a speculative size position, regular size position, tier one and tier two, and going through those each as a percent of my portfolio is double the previous. And so basically, the first thing I do is I figure out one if I own a stock, the first thing I figure out is what tier I want that stock to be in, based on risk and reward, especially on risk. And so I have a spreadsheet that then calculates the number of shares I want to own based on the current stock price. And that spreadsheet updates daily. So I have a rule. So if the stock starts running above its target position size, I either have to upgrade it or I have to take profits. And I have mathematical formulas that dictate how much I have to sell on a daily basis. And so I follow the rules. I've followed my own rules. And so what that means is that when a stock is running, if something has changed, like essentially if the thesis has changed, I might double my target position size. But if the thesis hasn't changed and it's a hot stock, I become a forced seller on a daily basis. So I think that's a pretty decent way to manage risk. And just generally, I try to always be in the position of um, selling stocks when they're up and buying stocks when they're down. And I think with biotech, like that definitely puts you ahead of the game in biotech, because just a lot of the time, like all it takes is, if you've got like one institutional buyer or one institutional seller, a stock is up 10% for no reason, or a stock is
Mm.
down 10% for no reason. Like I just punch that card every single day the market is open. And
We lose Mike.
formula. So 10,
oh,
15%
there
for no
he is.
reason, I'll add a few shares. And if the stock is up 10 or 15% for no reason, I'll take some money off the table. And I do that day in, day out with every basically.
Okay. Everybody else, you can hear me still? We're doing all right?
Yeah.
Okay. There was a recent interview lately. I'm not used to doing videos like podcasts and stuff, but I've had a couple of them kind of happen. And one of them, I mentioned Mike's approach, just that you know, my system is just an amalgamation, a mix of things I've learned from other people. So none of it really is original per se. And so I think unconsciously, I think in tiers too, kind of like Mike does, where 10% is the maximum I'm allowed to own. It can go higher from there. Like Nuvation right now is 14% of the portfolio because it continues going up. Syndax is now 12 or 13% of the portfolio because it keeps going up. But then there's the 5%, which is the maximum allowed to own for clinical. So I almost think of it as 10, 7.5, 5, and 2.5. And like Mike said, stocks move up and down these tiers. And at some point, if the risk reward is less favorable, I'll bump it down a couple tiers. If it's and vice versa, it moves up and down by news. Another thing I learned from Jose is like we were talking about is normally I sell my winners way too early. That's another one of my weaknesses. And so what I'm trying to put into practice is like Jose said, if I'm looking at how much I could lose, sure, the risk management, but if the thesis looks like it's firing on all cylinders, the story's going in the right direction, something like Syndax, where even after this run up, it's only like $1 billion enterprise value, then I can continue holding it patiently. I understand there could be things that go wrong, but between that or innovation, et cetera, I'm able to look at them where sales are accelerating 2026, 27, and just hold it patiently. And so that I think going to the other point that somebody had mentioned here, having the right management teams, I think that was Steve. If you have highly capable management, you have a thesis that's firing on all cylinders, it makes sense not to take those profits, but to hold patiently as long as that risk reward is still appetizing. So that's one of the things I'm working on currently with certain holdings, and why I have not even trimmed at this point with some of them.
Something else that I'd like to add, at least in my case, from a risk management perspective. So, Jonathan, you know this. I have a portfolio, yes, of biotech stocks, but I also have a portfolio of Swiss stocks, and which is slightly bigger, and it's one of some like perhaps the most conservative, boring stocks you can imagine, like Nestlé or Swisscom, etc. Right? Even though Swisscom is doing quite well. But and also I manage the market risk via derivatives, especially on the on the SPY. But that's what I do. Just stay there, and I try to manage my. I don't go that sophisticated like Mike into tiers, but I do have groups, and two or three names have been, say, overweighted. But in general, I try to be within 10, 12% top group, 5, 7, 8% second one, and 2, 3% the smaller ones. So when I get blown up, like Biohaven or Unicure, yeah, it's about 3% of my portfolio, my biotech portfolio, which is part of a larger portfolio. So I can withstand the losses when they happen, which will happen,
Mm-hmm.
right?
Yeah, no matter how good we are, anybody is, we're going to step on landmines, whether it's something like Biohaven, where that was a calculated risk. You knew that, hey, if SCA got approved, maybe it would double or triple. And if it, got a complete response letter, it was going to get cut in half. So, and then others, it's just, it blindsides you, and that's part of it, maybe unexpected adverse events or you name it. So I like that example of how Biohaven got cut in half, but Jose's had a banner year, and it's not like that affected his portfolio that much because he went in eyes wide open. Okay, if it loses half, will I be okay?
Yes. Yes. And also with regard to leadership, Metsera is an excellent example of leadership,
Mhm.
right? Of great leadership that had a track record before. So, because they were part of the medicines who were bought out by Novartis. So, leadership teams are super important to me from the point of view of risk management, because especially if they are experienced, especially if they were bought out, they were part of an acquisition before, because they know how to execute.
Gotcha. That's interesting. I know we always talk about management teams as selection criteria, but not as far as a part of risk management. That's an interesting way of thinking about it. Because we're at the final 20 minutes, I'll leave the floor open for any other topics people want to discuss, and especially our rundown of favorite ideas on radar, simply because the biotech sector has been running up so much lately. There's not as many ideas maybe that are as undervalued as before. It can be very, very easy to lower the bar for what you will invest in just because you feel the need to hurry up and do something. Like trying to fit a square peg into a round hole is how I like to describe it, where we try to pick something that's not really part of our selection criteria, but just because we're not seeing anything else. So the encouragement is to keep the bar high, not having any style stray, where you try to chase things that are not part of your wheelhouse. So with that said, anybody have any pitches or favorite things you're buying up these days or looking at? talking about Q4, sell the news reactions. You all saw there was one with Dermira, or not Dermira, sorry, Journey, which is DERM. Quite an interesting one that I think I posted a lot more notes in chat that you can look at, but a stock that I think the growth crowd will find eventually, non-biotech specialists, we've talked about this before, are attracted to companies that don't have binary risk because they've been burned by the biotech sector too many times, and companies that are profitable or experiencing accelerated growth. So names that I probably sold too early but worked out well for us were Arcutis, ARQT, Tarsus, TARS, in that vein, where as the sales are accelerating, you're seeing those stocks appeal to non-biotech specialists. So those type of growth names are quite interesting here to me, and I'll try to find more of those.
I started a couple of positions. One of those is New Amsterdam,
What's the ticker there?
NAMS, New
NAMS.
NAMS.
Okay.
Yes, NAMS. And this one is actually three positions. The first one being Zealand Pharma, but that was my next Metsera in obesity. But New Amsterdam, to be honest with you guys, I thought that this cardio component, whenever I saw Novo Nordisk losing this bidding war versus Pfizer on Metsera, and you look into their strategic divisions, cardio is one of those, right? And this is the Dutch company, could be potentially a blockbuster if their phase 3 hits well. So could potentially fit into that company, assuming that's the case. And if it's not the case, if phase 3 hits, it can withstand by its own. So it has to be both ways. And the third one, way longer term, LB Pharmaceuticals, and this is mostly neuro company,
What's the
will be
symbol there? LB?
LBRX.
Okay.
Yes, and this one has a component LB102, which will be focusing on schizophrenia first, starting at phase 3 next year, and then bipolar depression. The thing is that a derivative of this component already sells here in Europe, so it's already in the market. It wasn't able to make it to the US because of patent issues, but this company changed the formulation somehow in a way that the component has a patent to late 30s to early 40s. So strong patent. And strong patent with a molecule that apparently has been validated because it's commercial here. And a management team which is ex-Carmot Therapeutics. So makes me feel that I might have something in place. It's $400 million valuation. It has no catalyst for next year. The catalyst coming 2027. So this is really long term.
Okay.
But I like the combination because when I see Intracellular or Karuna or even Neurocrine, where they were when they were acquired or where they are today, so I can see an asymmetric risk reward here
How long
if
has the
things go
drug been
well.
sold in Europe?
I'm sorry?
How long has the drug been on the market in Europe?
I have to check that.
Okay.
I don't know the answer for it.
Okay.
What I like, one thing I love about chat is our contrasting styles. Like we have the top 5 holdings channel, the real-time trades, and the idea is we have people with so many different time frames, strategies. Like Jose knows, I personally, I need a steady stream of catalysts, whether it's accelerating sales growth or pipeline momentum to keep me interested, or else I just get bored and I sell. But Jose is able to face this catalyst
I
desert where
can
he's
do
like, yeah.
faster. I can do faster too, but this one is like longer term. I have other faster names, but
But I'm just saying,
come
I
on, I'm
admire
not
that.
like
Like, I'm just admire that though, that
it's
you're probably going to get a big win and you're able to sit through a 2026 where maybe there's less going on, or there's a lot going on behind the scenes, but just not the news flow.
well, that
Um,
was
go ahead.
equivalent to Apogee about a year and a half ago. It was pretty much about the same thing. And now it's where it's going to the catalysts in a different valuation.
before I forget, Mukesh in the chat window, he's curious if anyone has a view on CMTX. I'm guessing he's saying CTMX, which would be one you own too, right?
Yes,
Still
yes, I
own it.
own that one. Yes,
Okay,
yes, I own it. That's the pick for the competition. Yes, I still own it. Just as do I have a couple of minutes?
sure.
I got into this, to be very honest with you, first as a FOMO, as
Hmm.
a trade FOMO in May about out of ASCO, a FOMO that went wrong. And right after that, I immediately realized that they had a component 6904 that was targeting pancreatic cancer with some activity. And because of family reasons, I was like, this is something that interests me personally. So I found myself comfortable staying there. I started studying the company, and that 6904 went nowhere until December 24, when at the Piper conference, they started getting this component, CX2051, the one that is targeting EpCAM, I think it's colorectal. This one was the one having activity and ended up being showing up very promising or encouraging results. I think it was this past ASCO, which is the one driving the valuation today. And that doesn't mean that doesn't have a risk. It does have risk because this is way too early. Safety can go in any direction, right? But so far, management has been consistently managing expectations. They were aware that there was a death about a few months ago reported. Perhaps there was a little bit not well managed by them. But they have an update in Q1 next year. Currently, valuation is no longer as cheap to me, so it has to deliver. Right, it's one thing when the company is worth $100 million, and a second one is when it's 700 million. Right, they have to prove it. So yes, I hold it. Still small position, but yeah, and there's another component that is still way too early. I think it's CX801. But yeah.
Good stuff. Appreciate it. Mike is here in chat in the window saying he avoids IPOs like the plague, but he did buy MTSR around when you did. So
Ah,
I remember at the time, I think I was cautioning in chat that I was worried on binary risk with MTSR, but obviously worked out.
the pipeline in Metsera to me was way too enticing.
Hmm.
Way too enticing. To me, was differentiated. To me, and however, the company that I really wanted to be in before was Zealand. But at $10 billion by then, it was no way I could get in. I got in right now because it was trading at near 4 billion. And it's a completely different thing.
But
So
Zeal is now only on your exchange, right? It's no longer on the NASDAQ.
no, it's only on the Denmark. But for example, if somebody has interactive brokers, which I do, you can trade pretty much almost any market you want.
Sure.
So yeah, and
Just
I think
making
Schwab
sure
does
people
that
know
too.
that because before Zeal was on the NASDAQ as well, it used to
Yeah.
be dual listed and then it delisted.
Oh, I didn't
I
know
don't,
that. Yeah.
yeah, because we used to own it too, I think. Jack, Wasim, Steve, anybody have a favorite stock or two on radar that you want to share? No worries if not, just putting it out there for whoever wants to.
Well,
Go ahead.
no, sorry. What, Wasim, go ahead.
Only two. One is an old one that I used to own for a short period, Cormetics. It's trading almost flat now. Sales keep ramping
CRMD,
up.
right?
CRMD, yes.
Okay.
So I remember from like the last call, I think Mike said that that stock could be a great candidate for like tax harvesting, people losing money on it. So
Hmm.
I'm waiting on to buy it probably by the end of this year, early next year. And the other one is Ideaya. I know Jose has been owning this one for a long time. I own
Idea,
it,
okay. IDYA for those listening, IDYA.
tons of catalysts. Jose knows this stock better than I do, probably, most likely. 100% sure he knows it better.
Oh,
Uh,
that's when
Yeah, come on,
I sold
man.
it.
You
I
do
sold
it.
it. That's when I sold at Lowe's. So congrats to you on holding on to that.
yep. Those are basically almost no other ideas at
No,
the
no,
moment. I'm a bit out of
idea.
touch for the last couple of weeks.
It looks like Mike says he owns both CRMD and Idea along with you. Idea back when I did own it, the thesis was it was valued only for the uveal melanoma indication because they were going after not only the metastatic setting, but they were also going after adjuvant, neoadjuvant. And so it's a lot bigger opportunity than the market realizes. They had something at the time like over $1 billion in cash, a high burn rate. And I think the main risk at the time was they were spreading themselves too thin, too many assets they were chasing. So that might have been why I ended up selling, was just because I wanted it to be more focused. And I think since then it's gone up quite a bit.
So Jose, the predicate product for LBR RX is I just put in chat. You can take a look at it.
Sounds good. I
Okay.
appreciate that.
Yeah. So I'll study that more and maybe I'll take a look at the stock because having an entity that's been tested in millions of people in 10 million people years or more is a huge advantage. That's a
Yes.
huge the majority of drugs fail due to safety issues. So it's a very
Um,
Yes.
yeah.
Yes, and especially in schizophrenia, it's so safety, tolerability is huge. Patients do not
Well,
stay
yeah.
long, even if it's oral, that they don't stay long, they reject it and they go they deteriorate, etc. So and I can speak to this because of personal reasons, but I've seen this before. So tolerability, this appears to be already in the market, or safety appears to be fine.
Well,
yes.
I'll take a look at what they've done, and if they've basically made something that's equivalent to a prodrug, meaning that systemically the patient receives the same drug that's being used currently now in Europe, that sounds like an interesting situation. That might be a very interesting situation.
Appreciate it, Jack.
Yeah.
Thanks, Jack. And so again, this is for people who are watching the replay, they can't see the chat window. So that's LBRX is the stock. And how do I say this medication that's already on the market? Amisulpride?
That sounds good to me.
Yeah,
Yeah,
sure.
it's close
So
enough.
so with LBRX, what you're saying is because it's already been on the market and tested in real world to millions of patients, that helps de-risk the investment profile of LBRX, which is not a Me Too drug, right, Jose? It's differentiated, I would
It
assume.
is not, and it is differentiated. And the thing is that this amyl tried, I think it is.
Yeah.
So, so it's I don't it is differentiated.
Mhm.
So
That's what the management claims.
what
By the
would be
way,
interesting would be to understand the type of market share capture it has in Europe. That would be an interesting. I'll look at it a little bit and
yeah, I have plenty for me to also to do homework here,
yeah,
and there's
certainly.
time for that.
I have you guys are much more sophisticated than I am. I can see that my life of working in industry has made me unfit to be an investor. I can do technical due diligence, but that's it.
Um, how are you all freeing up cash for new purchases? Obviously, for some of us who are racking up buyouts, and that's not me, I've had a very long dry spell of buyouts, but Jose's had quite a few. So that's how you free up space for your new purchase. But the rest of you, or even Jose too, this goes for everybody though. How do you decide to free up cash for new purchases? And I say that because recently I had nothing I wanted to sell, so my rationale has been names that I think will experience seasonality in Q4 or other reasons that they could go down. I've been taking partial profits or partial sales in those to prioritize names where it feels like thesis is firing on all cylinders. So it's always hard knowing, where to add, where to take some off the table.
Yeah. I've been
Uh,
reducing, for
sure.
example, Madrigal,
So you did that
which has
recently?
been my top. Yeah, I have been reducing Madrigal, which has been my top position. And because the first trimming was just because I wanted to take some profits, but the second one was getting closer to a place where I felt that valuation was reaching an appropriate level. Even though I foresee can be still differentiated down the road, but I felt that risk reward was changing for me. So that was a way for me to start tracking, and everybody was super excited. So it's like, okay, combination. And also freeing up cash. I keep cash. I'm never fully invested, and I have some overweight at this moment Swiss stocks. So at any point in time, I can sell something and put it into biotech or something else.
I see in the chat, Mike's saying he's still long Axum, AXSM.
Yeah.
That was in playbook on the pullback to 100, but I missed it. But I do like the Alzheimer's disease agitation opportunity. Bob is talking about ESPR if anybody owns it. And Steve, he thinks Otsuka is interested in it still. And Steve is talking about AGIO. I think they had a liver signal recently, wasn't that it? They had something that caused the stock price to plummet because I had been looking at that one for commercial setups, but after that signal, I decided to steer clear for now. But any other names on radar? I feel like we've gotten a few good ones, but we still have 5 minutes left. If anybody has a name or two that comes to mind. Mike from NZ, Michael and I were both talking about what was that radio pharmaceutical company? Telix, TLX. It's a special situation because they're having a SEC investigation for their prostate cancer therapeutic. But that's a very small part of the overall pipeline right now. You know, it's more imaging, diagnostic agents, and then all the drug stuff which looks really, really interesting, but it's several years away from market. So it's kind of one of those questions on the share price. It's been pretty weak, even while the biotech sector is strong. Is wondering how low can it go? You know, falling from 18 to 15 to 13. Now it's like 9, and also how much could the damage be done from that SEC investigation if the rest of the pipeline is fine, because that's only one small program. So a special situation worth keeping an eye on, if nothing else, just because that's a space that's seen a lot of consolidation, a lot of M&A.
Yeah, well, so in my portfolio, I recently exited Stereo Access,
Okay.
and I had to because it dropped two trading days already. So good thing I sold, and I would have
Okay.
been down 20%. But it's medical devices, Stereo
Okay.
Access. This is Fernando. So
STXS.
yeah.
Yes. There was another one. What's the company that's related to Unicure? ClearPoint, CLPT, which I'd been looking into research-wise. I hadn't done anything with it, but it jumped from, what was it, 10 to 25 or something on the Unicure pivotal data and the FDA go ahead, and then it dropped just as fast with the FDA reversal. So that'll be one maybe to revisit at some point if it keeps getting cheaper.
I would say I'm long share Texas. I'm still a believer there actually.
Hello?
I I didn't buy any more after the post
Hello?
report fell off, but I think there's some great capital is coming. I'm still a believer. That doesn't mean the stock is going to go up tomorrow, and obviously it was a good trading decision to sell the stock. But I'm definitely a believer in Stereotaxis for 2026.
Okay. I think it was Joe Squibb who was trying to say something. Joe, can you hear us? Joe was trying to ask on one of these, seemed to. Anyway, if he wants to, he was trying to say something. Stereotaxis, you're still a believer, you still own it then?
Yeah.
Okay.
But it's funny, it's like, I mean, you look at these moves, like I don't know how much was that? That was down, yeah, it was like down 15%, and then the next day down another 8%. But these things can amaze you. You know, it could also be, I mean, not to say it will be, but it could be up 10% on Monday and then 10% the next day, again, just for no reason. So
Mhm.
I think with situations like that where I believe in it long term, I tend to just like eat the losses and hold on. Um,
Mhm.
yeah,
That,
it's very hard to predict how these things are going to move on a day-to-day basis.
well,
I think
I
really
like it.
what you've got to
Go
Yeah,
ahead.
what you've got to ask yourself is like, do you really believe in it longer term? And I think if you don't believe it, obviously you've got to sell it. But generally speaking, I'm willing to like I won't dig myself into a hole and buy a whole lot more, but I'll just basically stick with it.
Okay. No, I like what you said about especially a lot of these smaller names, an institution can just one person buying and selling, a fund can sell for many reasons if they needed the cash or whatever, can move a stock, 10% or up or down for no reason. So if you know what you own fundamentally speaking, then you're able to take advantage of those down days. We even see that in ROTY, where especially in bull markets for biotech, people know I'll publish the trade post, and only after the trade is published, I'm allowed to purchase it with my personal account. Just because one of the cons in this industry is that there's a lot of front running, and so I'll publish the post and then I purchase it. But the problem is still like sometimes the first few people get in, and then the stock will run up because a lot of people will try to get into it at the same time. And so one thing I always remind people in chat is whatever name we're buying, if it jumps up, 15% or whatever after the trade post, if that's not fundamentally driven, you can wait for whether it's a day or a few weeks, and it'll oftentimes go back down below the original price, and then you're able to buy it again when nobody wants it. But it's so hard in that crowd driven behavior when you see something rising that you want to buy. We have FOMO purchases, as I think Jose said he had a FOMO purchase recently he was talking about.
No, the CTMX, but that was an exception. Usually, when I do FOMO, I do bad, so I avoid those types of things. Sometimes it's like the reckless part of me does it, but
You
I
know you're
avoid
having a
it.
good year when even your FOMOs work out.
Yeah.
Just to add to that, I recently tried to see like the front running, how that front running worked. We have some names in Twitter where they would post, "Hey, I'm long this stock,"
Mhm.
and in just a few minutes, the stock is up 10, 15 minutes, 10, 15%. And then I go and see at the float to see how many shares are outstanding, and the float is very small. So
Mhm.
obviously that's why it's going up, not because they know something or there's news about it. So yeah, always to be careful with that. Uh, happened to me. So I think
No,
I've
100.
I've done all the things that should not be done. So at this point,
Well, you and
I'm
me
good.
both. I feel like that's how I learned everything was the hard way. So when I started trading in 2008, had nobody to teach me. I literally just bought stocks based on how cool the company name sounded. And I
How
tried.
about how about
I joined.
Billion?
Yeah.
The one I just mentioned, right? That's a good name.
Okay. What's the sticker name?
I mentioned in chat BLON, right? Have,
BLLN. What that's an interesting ticker name.
there was
Billion
an IPO
Tune.
last week.
Okay.
They IPO'd last week.
Okay. That's one to look into. It says molecular counting technology can detect disorders such as sickle cell disease and cystic fibrosis. Okay. Can't say I know too much about that one for sure, but pricing was upsized. I've seen it go as high as 120 and it says as low as 90 right now. So it's at the lows. That looks kind of like a Jose chat pattern where he bought MTSR at lows and it went up. But again, not familiar with this one, but one to look into. I'll make a note of it. BLLN. Do we know if that is commercial or that is that still preclinical or clinical, et cetera?
It was like a recent IPO as well.
Yeah. Usually
Yeah.
it's an IVD type of deal. So for
Gotcha.
diagnostic purposes only.
Okay. Yeah. New IPOs are definitely an area to look into, especially if it's an approved product that's selling. That kind of gets me more interested, just because it's less of the FDA risk and more just about sales. But Have to check into that again. BLLN. Somebody was asking the ticker. Michael was asking it. I want to say, yeah, it's BLLN. So recent IPO worth looking into. Forget what we were saying before. Oh yeah, and then I joined all these different like Wasim was talking about different chat rooms, different products being sold, videos, you name it. And it was nice from the day traders. I learned about, price action, how to read that and volume. From the swing traders about entries and exits. But you definitely had a lot of trading rooms and some that even got, called to question by the SEC, where they did a lot of that front running. And in bull markets and when things are at bubbly highs, you can see on X there's a lot of people that start their own, whether it's chat rooms, subscription groups, etc. And so you kind of have to be careful about where the emperor is wearing no clothes. Is it there for everybody, or is it there just to enrich the founder? Is it somebody? Do you really know if they're pumping it after they've already bought themselves? Things like that, because unfortunately that's pretty common. But I think that's about it from my end. Again, some of you guys, I think it was Jose saying he's had a better year than you could have ever imagined, right? It's been a pretty good one for you.
I can't believe it. This is my best year. October has been, I look into it. I do not post those kinds of like screenshots and stuff,
Yeah.
but I can't believe it. It's this has been by far my best year, and October has been like a major step function. So
I mean, Jose,
I
you
don't know what
even
to
got
say. It's once in years. I have no idea how to say this, but it's
One thing
incredible.
I like that we do in chat, which I like that hasn't changed for the most part, is we talk more about portfolio weightings and less about dollar amounts. And what I like is that evens out the playing field, because I remember when I started out with a small account and you have these guys posting their multi-million dollar accounts or whatever, it can be kind of upsetting where you realize you're not where you want to be. But what's nice is if we all own, if two people both own 10% of their portfolio in MTSR and it's bought out, whether it's Jose or whether it's, a college student investing whatever they're starting out with, but it's equally meaningful to both. And I'd argue even more meaningful for the person just starting out because they're gaining confidence in their investment style criteria. We write down what we learn from the losers, the winners, etc. So that's, I those of you who are just starting out with smaller accounts, those reading this, listening, it's important to think about it in terms of portfolio weightings. And I like to say how you manage a small account is how you're going to manage a big portfolio later on. Only the mistakes you may make are going to be much more magnified when you're running more money. So it's better to make them early on with your small account, write down your rules, come up with your system. And then when you have those rules in place, it's funny how that works. So one of my favorite approaches is from a friend of mine, Steve, who is a Delta pilot, and he trades penny stocks, swing trades them. And what I love about him is he's zero emotion. I ran into him in Starbucks. We catch up here and there, and he only opens his laptop maybe twice a week, looks at his setups on Radar. He'll buy and sell, and then he's done. And when he opens up his laptop, sometimes he opens it to some big wins, and you don't see the emotion on his face. He's just like, okay, that was nice. And sometimes he'll wake up, he'll open it to some big losses, and he'll take them and move on, and that's part of the process. And so if we can be like that, where we remove emotion from it, even when we're at highs, I know it's hard, when we're having our best years ever, but if we can focus on, being boringly profitable, on risk management first, on position sizing. One thing I love about community is anytime I'm riding really high, people tend to pull you down and bring you back to earth pretty quickly. And the converse is true too. When you're doing really bad, if there's the next bear market or whatever, I don't want to jinx anything, but when you're having a rough time, it's nice that people will get you up off the ground. And you guys know this in ROTY, it was April 2022, so the second year of the biotech bear market. I had a post that I was about to click send on and publish where I was going to close down ROTY. And it said to everybody that basically I was unable to add value with the portfolio. You know, I always say numbers don't lie, good times and bad. And I felt I wasn't adding enough value. And right when I was about to click sell, click the post to publish it, I want to say it was DSJ from chat. I don't know if it was on my cell phone or in chat. He messaged me, and it was one of those huge down days for the XBI. And he just messaged me saying, "You're not quitting on me, are you?" And I just started laughing because he did that right before I was about to press click. And, we talked about it. I talked with him, some other people, family, you name it. But you need people to keep you in the game at lows. And just as important right now is when you're at highs and things are going well, you need people to make sure you're managing risk, that you're not full of yourself, whether like Jose with his wife or us with friends or family or whoever it is. Somebody, when you're like, I'm all that, they're like, no, you're not. So something to keep in
Yeah.
mind. Jack, thanks for joining us for the first time.
My
Osmium,
pleasure.
everybody in chat, Osmium, thank you really much. I appreciate, I got to say this in front of everybody, all that you've taught me over the years. I feel like you've always chimed in chat a lot with these medical device stories, with your colorful opinions on the FDA. There was an Osmium quote that just said, a Jack quote, just the more opinions we have, the better decisions we make. And that's kind of my approach with this community now, is I don't want the quantity of members coming in, but even if we get one or two high quality people joining each month and they add their voices to it, we all get better as a result. So that, that's the only reason I'm still here. My portfolio's at highs. I feel like it's all grace at this point, because like I never thought I would get to this point. And I'm sure some of you, like Jose, et cetera, you never imagined you would be doing this well after all the dumb mistakes we made early on, all the FOMO, all the unforced errors, all the stocks we've chased. So yeah, wishing everybody a very profitable end to the year, and making sure we still put risk management first. Cheers, everybody. Thanks for joining in.
Thanks,
Yeah,
Jonathan.
thank you.
Take
Bye.
care.
Hey, have a
Thank
great
you.
weekend.